Hello, tech heads. Welcome to another episode of Lunch Tech in Chat. I've got my friend Will here. We want to talk about, we always talk about blockchain, making money, and AI, and all those things. Last time we talked about how do we create money out of thin air using, blockchain and stable coins and all that stuff, the questions that came from your kids, Will. But now I'm thinking, actually, there's people creating money and it's infinity, and people are just calling the infinity money glitch because you can create more and more money, your company can grow more and more, and the money is created and used by you. It's really complex, it's really crazy, and that's what we're going to be talking about today. Will, how are you?
Hey mate, how are you? I really looking forward actually to our chats today. We in our conversations we tend to kind of like to go a little bit in the tech, go deep into some of the emerging tech. We talk of obviously a lot about AI and then Web3 technologies core. They are way more other different emerging techs out there, but these two tends to gather a lot of our attentions because each of us actually we work in that space, in those spaces, and now, but actually interesting. This time around, I would like to cover sometimes also kind of we'll roll up a little bit from some of the geeky stuff that we cover, technically speaking, and kind of saying, what about I guess the commercials, the commercial conversation. We talk about society relationships, but today I think we are going to talk a little bit about the commercials and the commercial relationships between the different entities that are involved into what I call like the circular money glitch or circular web deals of circular web of deals, circular financing loop, whatever the name you want to call it. There's several names and people that have different
So
names
let me
for
ask you a
exactly the
question, Will.
same thing. Yeah.
Let me ask you a question. Imagine I am a company, I'm in the stock market. So my equities are all the impression, that people that are investing, all the investors have of my company. So if I own 20%, 40% of my company, the more people think that my company is more profitable, the more the value of my stock will grow and the more money I'm going to make on my stock, right? That's how money physics work, right? So imagine the scenario. My company is worth billions. I take millions of my billions or even billions. I give it to your company. And now your company spend that money on me. I give it back to you, spend on me. I give it back to you, spend on me. So if you look at, all my financials, it's looking like I've triple, quadruple all my money. But is
Yeah,
that,
the revenue. Yeah, the
yeah, the
revenue that.
revenue? But is that actually true? Is that even legal? But did you know that a lot of companies are actually doing that?
Yeah, actually, there are a lot of AI companies today. So we've talked about this a little bit in previous conversations where whether there was actually an AI bubble going on in the markets, and I think today we are going to talk a little bit more about what is it that is actually happening commercially behind this? Again, we're not challenging technically all of the benefits that the technology is bringing to everyday users and corporates and individual users as well. We're mostly talking about what is it actually that is going behind the scenes, and because the valuations is actually that's what we're talking about when we talk about price of entities. We're talking about their valuation. What is it that the market value them at? And the market, especially for public, but as well as for private companies, values company on a not necessarily on the exact amount of revenue and profitability that it generates today, but on the expectation of what is it that it's going to generate tomorrow in six months' time, is in a year's time. That's how valuations in the markets actually operate. And of course, that depends on the revenue and the capacity to generate cash flow of some of those entities. So we're going to talk a little bit about this circular deal. So, Andre, from what you've looked into, what are the top circular deals that actually happen?
Yeah, so there's lots of deals, there's lots of companies involved, but let's start by the basics and then we can explode on that conception. So there are four main companies that are sort of driving this. So in the heart of it, we've got OpenAI, and then OpenAI now has 10% of stake on AMD and is using AMD to build its new chips because OpenAI has made a deal with the US government that is going to spend that's going to help on the expansion of numbers of data centers, and it needs its own chip. So it's using AMD to buy chips. So I own 10% of a company and I'm going to now use that company to build some of my new technology. At the same time, I'm buying a bunch of chips from NVIDIA, and NVIDIA is investing money back on me. So there's 100 billion flowing back from NVIDIA to OpenAI that OpenAI is then using to buy chips from NVIDIA and buy chips from AMD, who at OpenAI owns 10% and it's making money on the profit to then reinvesting on buying chips from NVIDIA. So we've got a little bit of two circles here. On the side, you need chips, you need data centers. So OpenAI is investing 300 billion on Oracle to build data centers, and Oracle is taking the money that is getting from the 100 billion from Nvidia with the loop of making more money via AMD to invest 300 billion on Oracle, and Oracle is then buying chips from Nvidia, who is taking that money, giving back into OpenAI, and just creating this vicious cycle of money floating around like a train going in its own track. Does that make sense for you?
Yeah, so we're talking about NVIDIA invest into Oracle. Oracle offers cloud infrastructure for OpenAI. AI spends that cloud infrastructure back to Oracle. Oracle pays for hardware to NVIDIA, and everybody is the same money just circulating from one to the other. And everybody's looking good because everybody somewhere is generating cash flow and revenue. So therefore, from a PE, price to earnings ratio, so long as that cycle doesn't break and people start continue issuing shares to each other, doing a deal, raising capital from the markets actually to make that deal kind of go around, the price to earnings ratio of each of those companies actually should be fine. But it is still the same money just circulating from a pocket to another.
And that goes to another level, right? Like President Trump agreed with a bunch of those tech companies on Project Stargate, which is expected an investing of $500 billion that are coming from different companies like Meta, and there's a lot of money coming from SoftBank. So SoftBank is also investing on the Project Stargate, which most of companies are, and Project Stargate is investing back on OpenAI. And SoftBank is investing in Nvidia. So SoftBank is investing around 3 billion in Nvidia, and then 100 billion is going back to OpenAI. So there's a little bit of a circles, and that keeps expanding, right? Like so, Oracle's, as we said, is using money on Nvidia, and also Microsoft it owns part of OpenAI. So there's money flowing from OpenAI back to Microsoft and from Microsoft to OpenAI of around 14 billion. And then you've
But
got
that's in
all,
that's in venture capital for a while. So Microsoft actually is buying shares in OpenAI, and OpenAI is still spending with the Microsoft services in that case,
yeah,
right?
Microsoft services and data centers, right? And then you have companies like Meta, who's actually investing in Google. So Meta is flowing around $10 billion into Google, and Google is flowing some of that money around again to Project Stargate and other projects. So it's And the more you go into this, the more you get other companies. So it's like you keep expanding, you keep finding companies. So there's a view like if we take NVIDIA as the center instead of OpenAI, you have XAI, which is part of Elon Musk's companies, investing on NVIDIA. And then you've got Oracle investing on NVIDIA. You've got Intel investing on NVIDIA, and Intel actually investing on AMD as well in CoreWeaver. And then you've got Microsoft investing in NVIDIA, OpenAI investing in NVIDIA, and Netscale, Mistral, Figure AI all investing in NVIDIA. Like, it's crazy. So the money goes to NVIDIA, from NVIDIA out, and then from out back into NVIDIA. So it's like NVIDIA is actually in the center of this. Even if the thing started with OpenAI as, you know, the facilitator for all of this to be happening, NVIDIA sort of became the center of this. I don't even know how to call it. This,
This money flow, this money
yeah,
flow,
this
this
craziness.
circular money, yeah, this circular money flow, and I mean, which again, from I guess logically, that therefore justifies if it's at the center because it's building the I guess the hardware infrastructure for all of that to actually to be utilized, plus other things, but hardware is extremely important in that case justifies why its valuation it's a few times the valuations of some of the other players that actually involved in that money's team with you know brackets
Yeah.
but speech marks on the money scheme. But I guess interesting to see this kind of activity happening. I'm not too unfamiliar to this in the crypto DeFi space because you have money loops of this sort of activity. They have been operating forever. But it's interesting now that it's actually so clear around AI. So I guess one of the most important questions I would like you to really have your thoughts on it is what would make this break? Like
That's a good question. Yeah.
that infinite money loop. What are the areas where this money loop actually?
So before I answer your question, just adding a few nuances here. All this scheme is legal because it's all with contracts of buying and selling. So it's a legal thing. Like, it's nothing illegal. It's not printing free money. It's a money flow that is going through contracts and coming back. So it's a scheme, but it's legal, but it's a bubble, right? Like, it's a bubble that keeps growing. And if you are an AI company in the West world, not in China, for you to be successful in AI, you probably need to be part of the scheme, or else you're not going to get anywhere. Like, we see even Mistral now being part of this thing, right? I think for this to burst, I think there's a lot of incentive from the US government with Trump that is facilitating a lot of that to happen. So depending on the new person that comes and the types of regulations that are applied, this might cause some trouble to this flow of money, or even EU regulations. You know how they are highly regulated, and when schemes like that are happening, the EU usually gets involved and find ways of breaking the chain, at least in the European countries.
At
But
least from a regulatory enforcement perspective, yeah.
yeah, but I think at some point the money won't be, there will be more money flowing. And this is for this scheme to fail, if in some point the money that is flowing from these companies as part of this, let's call a legal scheme, doesn't get backed by the number of money spent by the actual consumers of the technology. So there's more money flowing from the tech companies in itself on investment and growing the potential of the technology with investment from banks, but the money is not actually coming back as real money as investment from consumers, so companies and consumers. at some point, the investment that are coming from banks like SoftBank won't be enough to keep this um,
Money
working,
machine.
because yeah, the
Yeah.
money machine oiled, because it needs more oil to put
At,
into the
at,
machine.
at
Whereas
the
this
at,
oil, yeah,
at
so
the end of the
so
chain, right? The end of the chain, the consumer at the end of that money chain.
yeah, SoftBank will expect return back as of all the investors, and at some point, the money can't just come from investment. The money needs to come as profits, as real money that are being made in the chain. If this money doesn't appear, I think that's where the chain's going to start to break. And once that does, or if that does, it's going to break everyone. It's not going to break only one company, because
But
they
what
all interdependent of each other now.
But what is it that we're betting on with these companies? I mean, realistically, because I think there is at least two ways of looking. Right? What we are betting on, the fact that these may continue. Like, I mean, let's be honest. I mean, Nvidia is a $4.5 trillion as a company. If you would say just, I mean, statically, but as a company, it would be more valuable than the GDP of most countries on 1 year. Of course, the GDP of most countries is a flow rather than a state, whereas actually here it's a state, right? Every year, an economy generates, an economy like the US generates, was it like $35 trillion? I think it's around 30, in the $30 trillion of GDP, and the next year generates another $30 trillion of GDP. So this company actually alone actually is valued now at $4.5 trillion. So, so it's bigger than 1 year of GDP generation for, G20 countries, literally. So I guess I think what is it that we're really betting on for that money flow? Is it on one side productivity? Is like we really, really think that productivity will be massively increased by the use of this technology. That's one bet. The second bet, and that is actually a growing bet, is because it's gonna replace a significant capacity of people in the market. And that's what some of these companies will be betting on. They will be betting on the fact that actually all the costs that comes from people will be replaced by this technology. And therefore, this is what they're betting on. I don't know which one is true, to be honest, because I think we are kind of in that between moment right now,
Yeah.
where we are seeing, I guess graduates in entry level things not having the same activity that it used to be. So there's elements of it. But is that related because we already actually are in some sort of like correction, but we haven't just realized it? Or is it because there is a real transformative kind of like um, thing on the human side?
I think the way that I see is AI will definitely do a lot of functions. If it's gonna replace humans, it's probably gonna replace existing jobs of humans, but I think it's not going to replace humans in the sense that every time a new technology is invented, new jobs are created. So I do believe that it's like the computers, like when the computers came, replaced a lot of people's jobs, and then the humans just took the step of the next level and found the new place for humans. I think that's what's going to happen with AI. I'm very pessimist, or I'm very
Optimistic. About
optimistic
that.
about this, that productivity will increase, a lot of roles will no longer exist, but it will morph into a new future where the technology is just living and doing something. Of course, the technology running, it means that now technology is making money, which is sort of not, but something that it could do in the past in different ways. But let's assume that now we've got agents working as humans making money, right? But there's a point. So let's think about Project Stargate. So 500 billion that is putting to create a bunch of data centers. You go create a lot of data centers expecting that the demand of AI will grow into a point that all that demand will have to be consumed. because now a lot of the tasks that are being done by humans are being done by AI. At some point,
So you're saying that at the moment we are in a transition between a supply cycle and a demand cycle. The demand is
yeah,
still not at that
I
level,
don't think
right?
the demand is on the 500 billion Stargate view. I think US is going ahead of everyone of creating the infrastructure for the demand that is still to come. That's my view. So like the technology is growing faster, the adoption is growing, and they're just expecting that this will grow, so they need to do the investment now. So they're doing a big bet of let's prepare everything for this future where the demand is so big that we need to put everything here now, or else we're not going to have enough infrastructure for the demand that is coming. So this is my view. But then, if we think about Project Stargate and everything that it's doing, I do expect that AI will consume less and less hardware and power in the future. And that takes me to the question of how much demand will grow. Because if it grows and stagnates into a point that actually there is no more demand to create faster and better GPUs because we already have 500 billion data centers around the world with GPUs that are good enough to run everything that we need to run. That's when NVIDIA will start to die. Because imagine if you invested 500 billion. Yeah, if you invest all this thing expecting that the demand will grow, you need to have the return to start making sense. The return and the demand for you to start replacing hardware again. So it's the same like imagine like let's make a parallel of you go and buy a car. So you bought a car today, it takes you from place A to B, you're happy it's doing everything that you need. Even if me as the car manufacturer say, I've released a new car here, well, that is 5 times faster, the boot's larger, you can fit 6 people, you might look at it and say, actually, I don't need it. So NVIDIA will get into that point that it's for it to remain relevant, it can't just do maintenance. It needs to create demand to replace the existing technology,
Okay,
or else it will just
new
stagnate.
products, improvements of existing technology.
And when that happens, I think a lot of this vicious cycle will start dying. And I think a new sort of framing will have to exist. And I don't know, because even LLMs, I think into a point, they will stagnate. Like they're getting to a point that it doesn't matter how much better they are, they're not as is not a big jump from what you had before. Like video games, like video games, if you take like Atari to Super Nintendo to PlayStation 3, big
To
generation
Xbox,
changes.
etc. Yeah,
Yeah, and then from 4 to 5 is not that a big difference, and 5 to 6 and so on, so on. So I think there will be like a stagnation on technology, and I don't think we're too far because AI is growing too fast. I just want to see if the demand picks up to the demand that they are expecting, and I think it will, but I don't think it will create a demand that is larger, at least for now or for a few years, of the infrastructure that they're building fit for the
because
future. Does that make
you have
sense?
so your framework, what you're saying is like you think that, like on my original question, which was like, are we betting on increased productivity or are we betting on replacing humans? And you have a bias more for the first one, which is the betting on increasing productivity. But from your point
Well,
of view,
I'm
like,
gonna say replacing
how
humans, but humans will migrate, which will create new productivity. But the
new
jobs aren't
productivity
going to be the same. Yeah.
design, yeah. And in that case, on that kind of increased productivity with, I guess, humans that will adapt to that new reality. And what you're saying is that we will have a demand that will continue ticking up here because at the moment we are very much like in a supply, almost kind of like level. There's a supply demand equilibrium, there's a lot of supply. The demand is kind of like ticking, but not at the same rhythm as actually that supply. And that's why we have like all of this circular money flows in a way happening. And then like the demand will keep kind of sort of growing. And then eventually we'll have to adapt for all the infrastructure to be, I guess, to be uh, innovated. And then we will reach some sort of a plateau where everybody will catch up to that plateau and then we'll take another leap later from that plateau up. Is that the way that you're thinking
Maybe,
about it?
maybe we'll take a leap, or maybe that will just become the new normal, like that's how
Like
everything works.
like the internet and yeah,
Yeah, like that's how everything works. It's just BAU, and new technologies or new human abilities will exist in that future. So I do believe that at some point it will hit a plateau, and I think the first plateau will be the hardware plateau more than technological plateau. Not because they can't make faster chips, because they might not need faster chips with all the data centers that will exist around. I think that's the point.
yeah, okay, that's interesting. Yeah, interesting enough. So this week I had an intervention participation at the university, yeah, in Melbourne, and it was I was actually kind of like talking to this graduate students who are still probably because of their parents, right? I mean, not only their parents, but I'm assuming also like a lot of them, you know, going through these traditional student cycles of, he was a finance student, right? So studying accounting and all that kind of stuff. And doing from these four cycles where doing still things very traditionally, where they are sitting in, having lectures, passing exams, all that kind of stuff. And I was just looking at all of that. And with the other panelists that I had, we talked afterwards because we didn't want to dump too much, but we like the atmosphere. But we were just talking to each other and so like, why are they still doing this? Right? Like when we are seeing things like, you know, graduates and entry level positions not replacing, and that's just because companies are still adapting to that and I guess reducing that entry level. And we were both kind of like talking about it and just came to this, I guess, conversation that evolved towards why instead of these traditional ways of doing university degrees, where you're sitting on listening to someone talking mostly right now about the past rather than the future, uh, for 4 years, and then you leave that environment and you are begging people for a job, right? And I said, this is so stupid to do that still in today's world. Why are these universities not doing, you know what? I'm taking my full role. I know that these guys are not going to come out of here and there will be people on the streets just saying like, you're a graduate, here you go, take on the job. Why are they not going and saying, let's make sure that during this 3, 4 years, whatever that those students are there, instead of doing practice runs for what the world is going to look like after they leave the university, why they don't actually make those 4 years something like where they're creating actual real companies. So those students don't leave the university for finding a job. They've created the company there, right? And they don't leave the university for some other company. They leave for their own because they have actually created the company. And the parent, I was just like talking to the guys like the parents, they need to adapt to that. The parents that are still pushing their kids to go into university degrees and all the pressures because the past used to be like this. It's so like, no, push them to build companies while they are spending those 3, 4 years in there. So actually when they leave it, they're not looking for a job, they have created their job, and this is
Yeah.
still not a reality. But I left actually the room. I was kind of depressed to be honest because I was
And
looking
and
at all those
and
graduates and
just
I was
and
like,
just on
fuck,
what
these
you're
guys are not
saying,
gonna find someone.
I think it makes a lot of sense. Like, leave university with enough knowledge and a job running, and you've created something that it's gonna be the next thing of the future. I completely agree with that. And the other thing is, if you know that in the new world now with AI, it's a lot harder to get a job because people prefer someone with knowledge with AI than someone without knowledge, which makes sense. Like all those entry jobs are the ones that are most at risk. Why don't you train those people like you are the best AI user for this specific thing? So you're a lawyer, You leave university knowing how to be a lawyer better than any other lawyer in the world because you have the knowledge of 1,000 PhD lawyers in your hands and you really know how to fucking use that thing. So when you go to the market, you can say, hey, look, I know I live and breathe law using AI and I can do better than your lawyers and I can show you, like that's the new generation. That's what the new generation should be. Like, I'm
Yeah,
so good. I know how
either
to use all the PhDs in the world because I've got their brains, like
yeah,
that's what it
either
should look
that
like.
or the other alternative, which is like they actually create a um AI law company within the university as they are going through it. And when they say, when they do that, they, before even leaving the university, they have already raised capital and they are going straight actually kind of
That
like
would
just,
be that would be awesome. I would
that
have
would
loved
be
to
the
have
way to do it because
worked
then
in
the
a
university
university like that.
completely, yeah, it completely changed the reason why the university exists because I can't believe that today with all of these technologies kind of like changing, the universities is still kind of going to that, oh no, there will be a job for you once you leave, like by going just like to your academic papers. There won't be. They just won't be because you have no experience. Like, and they do all of these fake assignments of where they kind of like they go like, oh, simulate as if you had a company. Why you don't actually have one?
Okay, let's create some
Anyways,
circular economy here, right? We open a university that companies are created inside this university that is us. When they leave the university, we have stake in the game, so we become partners of those companies. But they are only allowed to buy from suppliers that came from this university, at least in
100%.
the first few years. Then we create a bit of a circular economy that even if we invest in all those companies, our money is just gonna go around and
It
come
just
back to our
circulates and
pockets.
become exactly. No, no, but, I mean, why not do that? I mean, a university becomes essentially kind of like an equivalent of a Y Combinator or an A16Z, like a big venture capital firm that is investing in the brains that it's training. I mean, it makes complete sense because then you have like the best kind of like guys, professors, etc., that are teaching the best brains to
How to be the
sell
best
share,
in the
sell
market.
to be the best and actually sell the shares. Actually, it's your venture capital firm that is actually the university itself. What's like, I mean, that sounds such a no-brainer. And unless you're not doing that because of, I don't know, regulatory restrictions or whatever, those regulations, they need to change, right? Anyways, we probably should actually found a
Anyways,
university and
so
actually start doing that. I guess.
if you are a venture capital or a university and you like our idea, reach out to us. If you come with the money, we'll make it happen because I think we'll create a bit of a circular money between yourselves and ourselves, and it will be good to everyone.
Exactly.
So, well, for the people that listen to this whole podcast, what should they put in the comments to prove that they listen to the whole thing? What's the word for today?
University is a venture capital.
Okay, there you go. It's not a word, but it's good enough.
A sentence.
Cool.
University VC, let's say like one word. University VC.
Cool. Thanks everyone
Awesome.
for listening to another episode. Thanks, Will, and I'll talk to you next week.
Awesome. Thanks, mate.
Cheers. Bye.